Hi, this is Zach from Zach's Traders Cafe with a look at some bulletin board hero stocks on Tuesday, the 28th of June. Starting off with Eurasian Minerals, and we've got a nice bounce here, the third or fourth bounce off the 200-day moving average at 0.44. End of day close above the 50-day moving average at 0.52. The blue line should take the shares on to 0.9 pence, which is the top of a rising trend channel from as long ago as October. Normally the best bounces for stocks and markets are when they bounce off a falling 200-day line, which is what we're seeing here. Stop loss back below 0.4 pence at this stage. Sharratt Gold is next, and here we've got one of the better looking signals that you can see, a gap through the 200-day moving average at 6.72 pence. While above that, we're looking for a top of October rising trend channel target as high as 9.5 or 10 pence, which would effectively retest that month's resistance. In fact, if one was feeling optimistic or even more bullish, you could actually draw that trend channel up to 12 pence on a 2 to 3 months time frame. Stop loss back below the floor of this trend channel at 6 pence at the moment. Missed looking at Clontarf on many occasions over the last few days, but the overall picture here is that we're in a broadening triangle formation, one that can be drawn from as long ago as the beginning of 2014, top of the triangle heading for 2 pence, and that's the target here really, while there's no breakback below 0.5 pence, which was resistance on the way down over the course of early last year. Next stock, Craven House, another one which I think was covered a while back, but I haven't followed through on that. Here we're looking for, or we've already actually seen, the initial target, which was an April resistance line projection from last year, heading for 2 pence. Obviously the stock has backed off from that after the intraday peak at 1.9 pence. Ideally there's no break back below that old November spike at 0.69 pence ahead of a retest of the 2 pence level, but this has been a slow burn move to the upside, and therefore one would be confident that we will see further decent gains. Nice RSI uptrend line there as well from April should help the shares on their way once we cool off that oscillator reading currently at 88. Favorite stock of mine in the recent past has been European Metals, largely because it's behaved itself, and secondly because of the gaps to the upside. We had this move in April, and then again through the 15 pence level in May. Situation now is we got a continuing pattern of new support coming in at or above old resistance, which is a bullish sign. And the message here really, while we're above 20 pence, we could head as high as 40 pence, which is the top of the February price channel, only back below the 50-day moving average at 17 pence delays the upside scenario. If you're cautious of the stock, maybe you'd wait for a break of this line of resistance through 25 pence from earlier this month. But RSI 58 in a very good place, and the shares should hit 40 pence over the next 2 to 4 weeks. Stock which was covered here a couple of weeks back is Life Science Developments. That was before it broke the 50-day moving average at 2.34 pence, which was nice. Now we've got a bull flag breakout above the 50-day line and an end-of-day close effectively above recent June resistance. Big target here, 7 pence over the next month or so, while there's no break, especially while there's no break back below 3 pence, which was resistance on the way down. Finishing off with a stock which is also behaving itself very nicely at the moment, that's Orosur Mining. We had the 50-day, 200-day moving average cross at the end of March, and since then really the 50-day line now at 11.1 pence has been guiding the shares higher. While there's no breakback below the 50-day line, looking for a target here as high as 22 to 23 pence, which is the top of a rising October trend channel from last year. You could probably actually paint the stock even higher than that, but at this stage looking for the low 20s is probably the best thing to do rather than 35 pence, which is a possible on a say 3 to 6 month view. But that's it from me. More updates at the same time tomorrow.